Okay.
So we are live now. I mean, I'm recording this. Well, first of all, let me just go ahead and add all these indicators. So before we just start with, okay. So you know that you want to trade today, and I would likely to take the first pair as the euro US dollars, okay, because most of the people trade euro US dollars, so it has a high volatility. So when you have high volatility, there's a great chances that you can make a lot of pips. Okay, so I'm gonna start with the naked chart, so that you should also start doing that when I send out the indicators. Okay, so this is the naked chart that we're going to look at. Okay, we have this stochastic here. So stochastic is, or that I use is 7233. So that you can get it on from the MetaTrader. So you don't have to source it, or you don't have to use it from anywhere else. And the first thing what I'm going to do, I'm going to add my triple eight indicators. So the triple eight indicators includes the trending channel, okay, the trending lines, which are automatics. They just go and apply the range. So without having any manual adding to that. The second one, which I always put it, is the pivot and Fibonacci's. Okay, the pivot Fibonacci's are something that it is also automatic indicator that shows you daily pivot and shows you the daily the resistance levels on the Fibonacci ratios. You know, and let me just add that. At any point of time, if you do not understand something, you can just go ahead and ask me questions. I'll be happy to help you. Since we do not have much people.
Like actually, I don't trade on MetaTrader 4, but on FXCM.
Well, on FXCM, you don't have these indicators. I mean, you cannot apply custom indicators. Okay, so that's only good if you want to trade manual. If you want to trade manual, you should be very familiar with all this. Uh, yeah, so you can trade on any chart. If you are good at um, Fibonacci's, how to draw it. But what I suggest to them, because big investors, they trade using MetaTrader. Okay, so I added two indicators which I use, and now I'm going to add moving averages, which will be exponential 50. I'm going to use the color that as 50 on black. Okay, and the second moving average, I always take the 20 exponential moving average. I keep that green. Okay, so I use at the moment, yeah, we can just use these two indicators. And there is another Fibonacci indicator that I'm not using it, but when I send out the indicators to you, you're going to have that. That indicator is something that shows me the daily high and the daily low. Okay, since we have these indicators, so I don't want that indicators because it will confuse. It will make the chart messy. Okay, so now we have applied all these indicators. Okay, on a daily basis, if you want to trade the market, the first thing we have to. Sorry.
On what's the time of the chart? 4 hours?
Yeah, hourly. Yeah. If you want to trade on a daily basis, you should use hourly chart.
Just 1 hour, not 4 hours. Okay.
Yeah, you have to watch all the other big time frames like daily, and you can use the fourth H4. But for me, when I want to start with, I will start with um, H1. Okay.
Okay.
So when we have this indicator, we want to see this pivot point. Okay. Pivot points are really important when you want to trade the market. Okay. The pivot point is nothing. This is the middle of the yesterday's high. Okay, this is the yesterday's high and the yesterday's low. Okay.
Yeah.
So there is a formula for pivots, but since we have this automatic indicator, so we can simply look at as the mid of the trading chart. Okay, and I have separated the time of this chart. Okay, so this thing is this data, this trading charts. I mean, this candles are whatever happened yesterday. Okay, and this information that we have, which I'm circling right now, this is the day before yesterday data. Okay, and today we want to trade today, so we are here right now in the US session, and this is the today chart, and market is still in the move, and we haven't we are not near for like almost 5 to 7 hours to go for the market close. So as I just mentioned right now, we look at the period, right? When the price means the candle, okay? When the price is below the period, okay, it's below a period, right?
Yeah.
It's whatever the candles today we are looking at the market, it's all below it, right?
Yeah.
So that's the indication that the market in the bearish trend. Okay, market is under bear's control. Okay, and you can also assume or identify the market trend looking at this orange color lines. So the market is trending downwards, right?
Yeah.
So when we are in the bear trend, when we are in the downtrend, we should always look at the good price to sell the market, the good price. Okay.
Yeah.
So, yeah, you should understand the one fact. When you are in a downtrend, you cannot just wait for the buying. Okay, you can buy looking at certain patterns, but if you want to take the good risk rewards and make a quick quick market money, you have to trade with the trend, not against the trend. Okay.
Yeah.
Yeah. So for an example, I'm going to take other chart. Okay. So that you can understand what I'm talking about. I just pulled up the US dollar versus yen. Okay. Sorry, versus Swiss franc. Okay. If you look at the structure here, we spoke about it. First, we look at the pivot point, right? Okay, so if you look at these candles are above pivot point. Okay, that means
Yeah.
market is under bull's control. Okay, it's not necessary. Okay, it's not necessary that we have to just buy this as soon as we see. Okay, it's above the pivot point. Let's get in. Let's buy this. No. Okay, so we don't. We are a day trader. We cannot have 100 pips SL and a 50 pips profit. Okay, so we have to wait for the good price. Everybody, every bank, every trader, commercial traders, commercial banks, they always wait for the good price to enter the market because they want the good risk reward. So just this is for an understanding that when it's above the pivot point, okay, we are in the bullish control. I mean, bulls are stronger here. Okay, maybe the market is reacting to some news, or maybe it's rejecting the resistance level here. Okay, but it's still under the buying pressure. Okay. So if you take an example of yesterday, the market was below the pivot point, but it break strongly from the pivot and market continue rallying. Okay. So what do we understand here is the pivot points are very important, and the pivot points are basically a good support and good resistance. It can be a good support and it can be a good resistance as well. Okay, so make sure you understand pivot first, then we can talk about Fibonacci's and the channels. You can also look at the channel here. So market is trending upward, right?
Yeah.
Okay, so maybe this is just a retracement, this level. But the good chances to trade this pair is to buy when it reaches to certain level. For an example, if it has to test the pivot, okay, maybe it will break it and maybe it will consolidate and maybe tomorrow it will go up. But the buying chances are better than the selling chances here. Okay.
Yeah.
Okay. So let's go back to Euro US dollars now. If you want me to explain another chart, I can explain it to you if you got this the pivot thing and what I'm talking about.
GBP USD or the dollar.
GBP USD.
Oh, sorry, the gold.
Okay. So we are on GBP USD now. We can look at the chart here. Market is trending downwards. Okay. And the price is below the pivot point. You can see many candles. They haven't tested or haven't tried, but they're trending downwards. Okay, and okay, and you can look at this closely. Market is reacting to this orange line here. Okay, the market opened today and fell for like at most 80, 70 to 80 pips, and they retraced, and when they touched the channel, the trend line here, the market is now kind of rejecting. Okay. Okay. So yeah, if you ask me now, okay, as you said, we are in the downtrend and we want the best price, okay, to sell so that we can go with the trend. Okay. This is the good area to enter the sell. You can ask that, as per we just spoke about, trading with the trend, and trading the channels and trading the support and resistances. So you can ask me that question. Well, before we take an order here, okay, we have to look at two things, very important. The first thing we have to see if there is a news coming. Okay. Okay. The first thing is the news, and if you look at the economy calendar today, we have FOMC coming in for like in 4 hours. Okay, so now we know the most important news for today is the FOMC. Okay, and the second thing we should look at is the current market situation. If you don't understand what's the current market situation, like we have to look at the other pairs as well. Now, for an example, I will go and look at the Euro US dollars. Okay, so what the Euro US dollars is doing, and I can say it's forming like it's going bullish. Okay, it's in the bullish mode. So for pound, selling pound is something that we don't want to enter. And I'm going to tell you other reason. But if you look at other charts, okay, other pairs, maybe they are saying something because they are all correlated. Okay, looking at the other pairs.
Okay.
Okay, so I mean, you can ask me every day, It's not that today I'm going to just explain it to you and you will just, okay, you'll take the client. Tomorrow you will have a question and not going to answer. It's not that way. You can ask me anytime you want. Looking at other pairs, so what the other market is telling. Okay, so now let's come back to the Fibonacci's. Okay, so we know now. Okay, what is the market for today? Today the market is, when you look at the euro US dollars, it's telling us it's in the bearish trend. Looking at the pound versus US dollars, it's telling us bearish trend. And looking at the US dollar versus Swiss franc, telling us it's on the bullish control. Okay, and we know some news are coming. So now we know at least the market sentiment, the market situation now, right? Yeah. So now the most important thing. Okay, now we're going to talk about the important Fibonacci levels. Okay, if you're not sure about the Fibonacci, like what is Fibonacci and all, I think you should do some more analysis or articles, watch some videos about the Fibonacci and extension. Since we already have, okay. So, okay, there are many Fibonacci ratios. They start from 0, 23.6, 38.2, 61.8, and then we have 786. Some people use 76.4 and 100. Okay, so in these ratios, the most important, and we should always consider this 38.2, 61.8.
Sorry, you don't consider the 50%?
No, 50, I do not use 50% Fibonacci's. Okay, for me, I have tried it, I used to do it on my own analysis and I did it. But most of the people says, the 50% is very important. For me, it's not important because it's very, you can say it acts like a medium kind of support and resistance, and it is always breakable. Okay, the most important for me is 38.2, 61.8. Okay, we talk about 78.6 and 76.4 when we come to the 1 minute or 5 minute charts. But as of now, since we have this automatic Fibonacci listed on the screen, so we just talk about 61.8, 100% is also important. It acts like a daily high and daily low, and 138. Okay, those are listed below and above the pivot points. Okay, right. So if you look at the market today, okay, so we know that when we reach the London sessions, when you get up in the morning, the London session was trading somewhere here. Okay, so when I look at the chart, I know it's a bearish trend, but the market is on this Fibonacci, where you see 61.8, right?
Yeah.
Okay. So if you look at these candles, the market couldn't break this 61.8. That means some buyers are still there. Some buyers are ready to buy this, right? So I don't want to sell here and stuck with the trade because I know my next, if I put a sell order somewhere here, my SL should be somewhere here above this pivot, or the highest I can do is on the 61.8. Okay, so make sure when you're putting take profit and stop loss, okay, you're also looking at the Fibonacci ratios, because your Fibonacci should be your take profit, your Fibonacci should be your stop loss. Okay, if you place somewhere here, okay, if someone did it, okay, some must have sold after looking at this bear candle, markets went, and they may have kept the stop loss somewhere here. Okay, it's touched the stop loss and they're out of the trade. And because they don't know what is pivot, they don't know what is Fibonacci ratios importance. So when you have my indicators, you will not just enter the market without all the confirmation. So you will look at everything and then you're going to trade. Also, if you, for an example, okay, I know it's a downtrend. I know, okay, there is something wrong with the euro. We just had a Brexit. Now UK left the European Union, and I think euro is going to fall. Okay, if you look all the sentiments and you think about it, you just enter the trade. Okay, so if you enter the trade somewhere here, you want to take a profit somewhere on 100% or on the 138.8%. Okay, and your stop loss is somewhere here. Okay, if you enter the market. Sorry?
I totally got what you're saying, but you're talking about like a trade, how many days trade?
Pips, yeah, risk reward.
Like you're trading the trend, so it will happen in days, weeks, some weeks,
No,
like
not weeks. If you trade on a daily, on a 1 hour chart, yeah, most likely you're gonna hold the trade for like 2 to 3 days. Okay. Well, it's yeah. You can, if we are sure that the market is going to go down. So why do you want to get the bad price? I'm like, you can wait for the price to come here, and you can get the best price. Even if it doesn't come, it's not an issue, because tomorrow market gonna open. We will see some Fibonacci ratios somewhere here as well. Okay, we can trade that way. For today's analysis, for today trading, we see there is no high risk reward. Okay, for an example, even if we enter the market here, if you enter the market here, your take profit would be, let's take an example, you're gonna take the profit on 100%, which is almost like 80 pips. And your stop loss is somewhere here, like 120 or 25 pips, right? So what is the risk reward? You have a very bad risk reward here, okay? And looking at the current market news coming, we have FOMC, which is very volatile, which is highly volatile, right?
Yeah.
What I'm saying, yeah, you're not going to have the same situation tomorrow as well. You're going to have a clear situation for tomorrow or day after tomorrow. But I'm talking about the today. This is the condition. This is the situation where the most of the traders fail, and they lose money and they'll lose accounts. So I'm just giving an example, like how do we trade? Okay, no one can perfect the forex. No one can do 100% job. But when you're trading, you should be ready to take low risk, like losing like 30 to 40 pips, and you should be happy to take around like 50 to 60 to 70 pips. If you take 100 pips, and you're a good trader. Okay.
Roughly 2 to 1.
Yeah, 1 to 2 trade is good. 2 to 1, 1:2, 1:3 is also good. But 1 to 1 is also good. I'm not saying that. But 1 to 1 is when you are trading the news immediately. Like there is a big news coming, and the market is not going to wait. Market is going to jump right away. And at that moment, if you have everything clear, if you have a clear picture about today's market, so then we can go for 1:1, right? Except the news. Okay, except the speech. Okay, when you have the speech coming in, now you shouldn't be trading for my understanding, because the market will not just go down. It will go up. It will try everything. It will try like this. So if you enter somewhere here, your stop loss for the sell will be hit. Your stop loss for the buy also will be hit. So trading speech is not recommended using this, but you can trade the news, like you can trade NFP, you can trade employment, and you can trade GDP, you can trade export, import, okay? You can trade retail sales, inflation, like CCI, CCP, PPI. Yeah, you can trade those kind of news. Okay, so just to be sure that if we have everything clear, for an example, if we had a pivot somewhere here, okay, because the market has rejected that pivot many times, and we have this 60% somewhere here, and 100% or 60%, 100% somewhere here, I would have traded this as a sell. Okay, because if I enter this market here, for an example, if I enter a sell here, okay, what I'm going to do is I'm going to put my stop loss 5 to 10 pips above this pivot point, which is going to be
How
like
many,
20. Sorry?
how many pips above the resistance?
Well, it's recommended to use like 10 pips at least. 10 pips, right? 10 to 15 pips. And my take profit, if I enter the sale here, I'm risking 25 pips, and I'm willing to take like 40 pips, which is a good risk reward, right? Okay.
So sorry, can I ask you a question?
Yeah.
So basically, like looking this situation in the chart, like you are gonna probably put a sell once like the candlesticks goes above the pivot point, and like you're gonna put the stop loss at 61.8 above the trend line, and take profit on 100% or 60.8 above the pivot point.
See, this is not a good trading situation right now. Okay.
Yeah. So
Because my stop loss is more above, bigger than my take profit. So I don't want to be trading here. The first thing. The second thing, I know the FOMC news is coming, so I shouldn't be putting my account on the risk. But if you look at the yesterday's trade, okay, let's give you an example of the yesterday trade, Nevio. Okay, market traded in the SN session here. You can see there was some consolidation in the UK session here, and the pivot point is here. Okay, market holded a good support at this zone, but when you went to this 61.8, if you look at this candle, it couldn't break this. Even if it breaks this, but it closed below the 61.8, and there were many attempts to break. They failed, and they broke the period, and the market continues selling. Okay, for me, the yesterday situation, if I wanted to trade yesterday, I have a good risk reward. For an example, okay, let's imagine that I'm going to enter the trade somewhere here, looking at this candle. My stop loss should be, as I told you, like 10 to 15 pips sometime, because it has tried above this. But if I have to just be sure, or else we can just go to previous structure, just keep my, because I know I'm going to risk very low. Even if I increase my SL to like 10 to 15 pips, I'm going to get a good risk reward. I'm going to put my stop loss here. I entered my trade here. My profit should be like 100% here, right? If you look at the risk reward now, how much you are losing? You're losing like 35 pips, and you're making like 78 pips. Now this was a good risk reward trade that we can take, that we would have taken yesterday, right? So this is how this is what I'm talking. This is what I'm saying. Okay, here also, if you go to, let's take an example. Okay, here on the US dollar versus Swiss franc. Okay, 61.8 is here. The market touched that and started climbing. Okay, but yesterday we know the market was downtrended. but we weren't sure it's going to break the pivot. The pivot was broken with a high level of um, with the good candlestick. Okay, so if you look at the market here right now, if I was buying this, looking at these two candles, the one is taking the support on 61.8, other one is closing in the middle of the black candle. So that's a good sign that the bulls are coming back. I mean, bulls are stronger. So if I wanted to trade yesterday, my stop loss should be below somewhere here, and my take profit should be somewhere 100%. But if, yeah, again,
Okay,
you're gonna go and look at sorry?
I got this concept. Yeah, I got this concept. And like when like you're looking at the charts like daily, if you were yesterday, for example, and you were like uh in the white candle, like next to the next to the black
Black
one
one.
with the
But you won't be
so
able to understand the market. I mean, you won't be able to just enter the trade looking at the candle, okay? Because it's still below the pivots, okay? Market was still below the
yeah.
pivot, but when you go to the small chart, I mean the lower time frame chart, okay? You just have to make. I mean, you just have to go and make a note of this. If we ever see, okay, this was yesterday, I guess. Okay, let me just separate this. Okay, there are certain patterns you should always look at, which nobody will tell you. Okay, whether market is reversing or the market is now it's good to go. Okay, so again I divided this chart. Again, we were talking about, this is a 5-minute chart, and we were talking about this level. Okay.
Yeah.
All right. So see, it doesn't matter like if pivot points are there, yes, I know pivot points, I know. Well, I can see there was a news for US dollar or euro, there was a news for US. Okay. So sometime market will react to the news and it will reject all the technical analysis. For an example, it will not respect the pivot, it will not respect the resistance, it will just break. Okay, those kind of situation, whenever you see a pattern, on a 5-minute or a 1-minute, some pattern making this way, okay, and consolidating this way, this is the buying pattern. Okay, to make sure that it really, I mean, you understand this, okay, because this is the formula. Nobody will explain you, even if they know this, okay, they will not tell you, because this is the $1 million trading secret. Okay, because see, if you look at the market here, there was a sell, of course. Market came in here, bounced back, and it went straight up, but it did not break this level. If it was breaking this level and trading somewhere here, well, it's not a bullish. Again, it will consolidate again if it would have gone, continued downtrending. Okay, when you look at this chart, make sure when you here also, this is where we can also draw a chart. I mean the Fibonacci. For an example, you see this pattern, right? You see on a lower chart, you when you go see, this is where you look at. This is when you're gonna look at when you see those 61.8, this period. Okay, you're not gonna look at. I mean, somewhere in the middle of this. Okay, you're gonna have to look at these patterns on these ratios, right? If you really want to get the good entry. Okay.
Yeah. So you got the good entry like just because you were like you knew about the news and
News and the pattern. News and the pattern.
on like
Sometimes,
on a slow on short time frame patterns.
yes. Yes, right? See, this is really important for you, for anyone, okay, looking at these patterns. So on today's call, if you just go ahead and let me just show you why did I take the US dollar versus yen trade, okay? See, I was just giving you the reason, I mean, I was just explaining you the indicators. If you see the market is completely bearish, right? Right?
Yeah.
And it's below the pivot point. So when I woke up in the US, UK session, the market was really bearish, and the market, I know it's under bears control, and I did not. I mean, I want to sell, but I didn't wait for FOMC. I didn't wait for any other confirmation. Okay, the reason I entered this trade, if you go back to the 5-minute chart on US dollar versus yen, you can see this beautiful pattern. Okay, this beautiful pattern which occurs rarely. This is the beautiful pattern here. You see this?
Yeah.
Okay, whenever you see this pattern here like this, make sure they do not break this. They will try,
Okay.
they will jump. So this is the good entry. Okay, this is
Buy.
yeah, for buy. So I send the signal somewhere here for buy, and I'm already 45 pips in profit. My entry was here, I'm 45 pips profit already. But I'm expecting the market, the US dollar versus yen, to go to, since we have FOMC, to go to 101.40 was my take profit, which is 1014, yeah, which is somewhere here on the 61.8, somewhere above that, okay? Right?
Yeah.
But we are in profit today, right? We're in profit. And let's talk about the euro versus pound entry that I took today. This is the chart, okay? And as you can see, as usual, when we'll first look at the pivot, it's above the pivot. That means euro is stronger than the pound, okay? And I see, there is a Fibonacci, which is Fibonacci ratio. It's very below from this zone. But when you look at this trend line, the market was consolidating on the trend line. So trend line also acts like a support, and it's also the price is above the moving averages. So there is a good indication that the euro is under bulls control, right?
Yeah.
And when I looked, see, it doesn't mean that I'll just take a trade. Okay, it's above period. Okay, I think no. I took only these two trades only because of the pattern, okay, which works like 99% of the time. Let me just go ahead and pull up the 5-minute chart for you.
So you always trade 5 minutes and 1 hour. So you have a look in 1 hour just like to understand the trend.
Mm-hmm.
And if like there are all the things that you need to be.
Yeah, whether I'm going to get a good entry or not. I mean, because this pattern works phenomenally well. Okay, phenomenally. You can try this, whenever you're free. Try it on demo. And if you don't understand the pattern for a while, ask me, Manju, do you think this pattern is valid? Okay, I'm going to explain it to you, because there are sometimes those patterns looks similar, but they are lacking on some kind of a structure formation. So if you look at this right now on 5 minutes here, See, today we really had a bullish for euro pound. So I was about to take a trade. I mean, I was thinking about taking the trade. If you see my video for today, did you see my video that I posted about the coffee pattern on
No, I didn't.
Phoenix? You didn't?
No, I didn't. I didn't.
Just go back to history, and I explained you the coffee pattern here. This is the coffee pattern. Okay,
Yeah.
Phoenix. After this training, just go ahead and have a look at it. Okay, so and it broke the coffee pattern, and the price was trending somewhere here. So I was actually waiting for this beautiful. This pattern here. If you look at this, it's not that clear. This is the pattern acting as a support. So I wanted price to come down somewhere here, but the price did not come here. It went straight away up from this zone, and I looked at the pound versus US dollars, euro, and pound was weakened than that, and I took a trade somewhere here, and I asked people to take the profit somewhere here, okay, because this is the resistance, okay.
Yeah.
Okay, so yeah, I did not take trade on euro US dollars because I did not see. I know it's under bearish control. It's trying to go up and all, and now it's going down. But when I looked at the 5 minute chart, okay, and it did not give me any buying confirmation. For an example, this is another example.
So
When you
even
look
if
at
it's in a bearish like patterns, you didn't trade Euro USD just because like the 5 minutes time
see,
frame didn't tell anything.
no, for the bearish, no, I'm not getting the good pattern here. I'm going to tell you. See, I was looking at this pattern. If this pattern was not broken, like this pattern broken right here, okay, it's broke,
Yeah.
it's broke. This is not a good pattern. All I wanted was the pattern completely making and not going below this. Okay, maybe it
Okay.
will try, but what it did was it did break and went down.
Yeah.
Okay, so I know it will retrace. Right now, also see what I'm going to tell you is what I'm looking at this right now. I can tell you this will go down a bit. It will retrace. Okay, it will retrace and it will try this pivot, and then after FMC it will fall. That is my feeling. Okay, but this is not the right time to sell, okay, because I'm still not in the good price, and there is a support here. Okay, market can bounce anytime because of the FMC. And if you want to trade the bearish, okay, if you want to sell, for an example, I want to sell, I want the market to go somewhere here on the pivot line, okay, and make a double top, okay. When it breaks, I will enter somewhere here. Or sometime what it does, it will go and retest and it will fall.
In a 5 minutes chart.
Yeah, in 5 minutes chart.
Okay.
If you want to
So
wait,
you analyze like the. Mhm. Tell me.
if you want to trade, I mean, if you wait for these patterns on hourly chart, it will take like 1 week or 2 weeks to get that pattern. Okay, and yes, of course, you're going to make more money. But if you want to trade on a daily basis, you cannot wait for the market to complete the structure on H1 or on H4, right?
Yeah.
So yeah, so that's the reason I would love if I want to trade daily, I just look at the 5 minute chart. And if you see this pattern, it's called head and shoulder, kind of head and shoulders. Okay, so whenever you look at this, you should always look at this also, stochastic. Okay.
Uh-huh.
right? See, the reason I took the trade on US dollar versus yen, the stochastic was oversold and the pattern was really nice. Okay, if you see here, I saw this pattern and broke above the structure and it was oversold, right? So I have a good risk reward and my margin will not be, I will not have a margin call. I may go in profit like within a few minutes. So that is the another thing you should look at.
So I didn't understand well about the indicator that you use above the stochastic.
See,
How do
stochastic.
you compare like the two indicators? Like how do you compare the patterns with the indicators above, below?
See,
That one with.
I told you, okay, I look at for a bullish pattern, I will look at the market like this,
Yeah.
okay.
And it
Sometime what
doesn't.
happens, sometime it's W formation and holding a lot of candles here and breaking those, that is also one of the bullish pattern. Bearish patterns, again, head and shoulder,
Yeah.
okay, and three-way, like sometimes you see this kind of patterns, okay, for the bearish, and of course double tops, okay. So this is the bearish and this is the bullish reversal, okay. So when I see those patterns in the clear picture, so if you can see, the market did respect this level. It did not break it below that, okay.
Okay.
Here, so you see this line?
Yeah.
It did not break this. If it broke on this zone, I certainly wouldn't take this call as a buying call. You can see if it was broken here, it's an invalid. It's again a bearish. Okay? Since it did not break, for me it was a clear indication that the market is under bull's control. Okay?
Yeah.
And also stochastic was oversold. Okay? And when you are on an uptrend, you should look at the stochastic. If you are an uptrend, you have to wait for the price to get at a good price, and you have to look at the stochastic. It's at the oversold and climbing from the oversold, and it should at least stay above the 20% on the Fibonacci. Sorry, on the stochastic. So that's the another confirmation you should take a buying call, right? And now, if you look at Euro, again, I'm going to explain it to you, the Euro GBP. If you look at the Euro GBP, again, there was a pattern already created here. This is something, the cup pattern, one of the bullish and bearish candle. When you add the stochastic here, 72, and you can see it was oversold. Okay, and market broke the cup pattern and retraced, but I know there is a support hidden here somewhere in this zone, and it was oversold, so it's a good entry for me. And I'm going to put SL somewhere here. I'm going to take profit should be here on this zone. Okay, so there's a good risk reward. I was risking like 70 pips for 130 pips, so it's almost 1:2, right? Yeah. So I'm just going to combine. I mean, just include everything what I just discussed to you right now. So first of all, when you get up in the morning, when you look at the chart, you're gonna look at the pivot points. Okay, whether the market is the Euro US dollar is falling because we know it's under bearish control. It was just waiting for good price, and it started falling from this zone. So it's on a bearish control. I want to get the good price. Second thing, I want to wait for the news. Third thing, I want to look at other pairs. How the pound versus US dollar trading, how the other pairs are trading, which are correlated with it. And if you look at the chart right now, it's bounced from the 61.8. Do you see this? How it is respecting? It fall down here, and it's retracing up. You know?
Yeah.
So understand what I'm trying to say? Yeah.
Yeah.
So,
Now it's like reversal in the movement. It just tested the 61.8.
like testing it, okay? See, yeah, we are not going to we're not going to go and enter right now because we are still waiting for the news. Now, I won't be touching because I'm already on 2 trades which I had 100% confirmation on using my analysis, and which is already doing well, and I'm in profit right now. I may get that into break even, and Euro GBP both are in profit. So I don't want to take any other trades because I'm not sure how the market will react to the news, and I'm not getting a good risk reward as well. So I may just stick with US dollar versus yen and euro versus pound. So we are already almost like 35, 40 pips right now on both the trades. So even if I close it, I took 80 pips in just 1.5 hours. So I'm the winner for today. So this is how how I should look at the market, you know?
Yeah. Can you go back on your Euro USD, please?
Yep.
So from here now, like you always wait that the price goes to the pivot point to enter the sell, like around.
Sorry?
So to enter a sell, now you are waiting that the price goes roughly around the pivot point.
Oh, well, since today we have FOMC, I will wait for the market to go to somewhere here. Let me just show you. Somewhere here. Okay. Maybe it will test this. Maybe it will test this. There is another middle trend line. Maybe it will test, because that's where I am going to get risk reward, right? Because if I enter somewhere here, my stop loss would be somewhere above this, right?
Yeah.
And look at the risk reward for me. I'm gonna have a lot of good risk reward if I trade here. Since FOMC, it's really volatile. It's like a beast. It won't just trade between 30 to 40 pips. It's gonna trade like about 60, 70. It's gonna jump 50 pips up, 50 pips down, and even after FOMC, the market will go in the same direction for like till the ASIAN session. Like 100, 200 pips. So why do I want to just get stuck here? I mean, even I'm not sure. Okay, maybe I'm looking at the market right now. Okay, it's Euro US dollars is under bear's control, but I can see this gaining a support, right? It's gaining support.
Yeah.
It's not rejecting the 61.8. So maybe FOMC, the Fed will be very dovish towards the US dollars. So maybe it will break all this resistance and may go up. You know what I'm saying?
Okay.
So even if it breaks above this, and it will retrace, and if it holds support on pivot, and I have another other trade, I'm going to trade buying on Euro US dollars. So again, when I'm going to trade on this level, I'm going to see the 5 minutes chart, and I'm going to trade the FOMC once the market is settled, or maybe when I read the news, about the FOMC statement. So maybe, they are dovish. So at that moment, I can enter the market. Okay, you can see on 5 minutes chart, it's respecting that 61.8 a lot, right? Right?
Yeah.
Bouncing from that side. It's very strong. It's very strong. I'm telling you, it will not just go down now. It will retrace unless until the FOMC statement. Then it will break the entire structure. Maybe it will go down or it will go up. So we have to wait for that, right? But as of now, euro, sorry, US dollar versus yen was a good entry, and euro versus pound was a good entry for us. So we just traded that, and so now we just gonna wait for the market to give us some more confirmation after FOMC, right?
Yeah.
Okay, so that's it for today. You know, we covered, I think, most of the technical analysis on this. And what I'm going to do is, I'm recording it, okay, and I will be posting it. I mean, I will be uploading it on YouTube, but I won't be keeping that on YouTube because you know, this is for the paid people. You know, so we're gonna upload this on our website. You know, so that, you know, if someone misses it, they want to trade. I mean, they want to use those recording, because I'm not going to continue. I mean, I'm not going to repeat what I did on Monday, on Tuesday. Okay, so anyway, I'm going to moving with my own. I mean, as per the schedule. So we won't be just repeating them. And anyway, the next week we're gonna start the classes once again. So we have to cover as per the schedule. So that's how we're gonna do. So I hope you understand, or I hope you now know like how we're gonna enter, what are the key points that we're gonna look at when you want to trade the market, what are the buying rules and what are the selling rules. Even if I enter with buying or selling, you know what I'm going to look at first. What are the risk rewards that I'm getting, and what the market is telling, what is the news, what news is coming. So you're going to look at all this and apply at once, and you're going to trade on a daily basis, right?
Okay. Yeah. So basically, all these tools, I can find it in on MetaTrader 4. Just
See, you can trade FXAM, but you know, if you even if you have the MetaTrader, you can use the demo, and you know, you can apply indicators, and then you can trade using the FXCM chart, right? Let's see. This is for the information. You don't have to trade on MetaTrader. This is for the information. See, this is gonna give you.
I can use MetaTrader as my study, as my like analysis.
Exactly.
Pattern, and
exactly.
then put the trade.
Right.
All right. So all
you have any more
and all the trends.
Sorry.
Pardon?
Yeah. Go ahead. You were asking me something.
Yeah. Basically, like all these indicators, like about the trend lines and about Fibonacci, like it's what you did at the beginning of the lesson, don't you?
Yes. You have to read all those trend lines, periods, Fibonacci's before you enter the trade.
Yeah. No. I mean, like all the indicators that are on the charts now.
I'm going to give out these indicators at the end of the training on Friday. I'm going to mail it to you.
Okay, perfect. Awesome.
Okay. Because you know, if I give you these indicators, you know, you won't be able to understand the rules. So once we're done with that, you know, we're going to send it to you, and you can apply it on a daily basis. And anyway, we are on support, so you can ask me question, and you can ask me anything that you like about if you don't understand something, right?
Where can I contact you directly?
Whenever you want to. We are always on Telegram. You're always on Facebook. I'm always online. Okay, so whenever you can, if you don't understand it, Anyway, we are gonna. If you have questions, you can keep it for tomorrow's session, and you may ask me this questions tomorrow as well.
Okay. When is the next lesson? Tomorrow, 9 p.m.
Tomorrow, 9 a.m. EST. The same time, see, I wait for people, if they are not ready, because few people are going to work, or they have scheduled. So I wait for a few, 30 to 40 minutes of time. I don't want to, I don't want people to lose, the classes. If they are not joining, we have recording, so they can watch it later.
Okay, so I'm gonna have a look at the lesson of yesterday that this has been recorded anyway.
Did you look at that?
No, I'm gonna have a look now.
Okay, I will send you the link. Okay, you just send me the telegram. Send me a telegram. I'm gonna send you the link. That one as well as the today's. I'm gonna upload it now. Okay.
On the students chat.
Yeah, you can in the students. I'm gonna post it, but Steven says do not post it. Okay, because we have to make it private after a few people watching. What I'm going to do, I'm going to send it to you in the private session, and if someone asks it, I will send the private session. And because after watching the videos, so he asked me to delete those from the YouTube channel, and so that he can download it on the website. Okay, so we will wait till you guys. We will wait till you guys go ahead and watch it.
Okay.
Okay.
I just text you. Yeah.
Yeah. All right. So thank you for joining me once again, and I hope you learned something out of this. And have a good day. And looking for more trading.
Okay. Yeah. So talk to you soon.
Yep. Bye bye.
Thanks. Ciao.